Hey everyone, in this video I'm going to answer which one I think is the better dividend stock to buy, Coca-Cola or Procter & Gamble. To answer this question, I'm going to look at the dividend yield, revenue, profit margin, and valuation. So let's jump in starting with the dividend yield. Coca-Cola offering investors a dividend yield of 2.3%. Procter & Gamble very close and slightly better at 2.43%. But remember, when you're investing in dividend stocks, it's the total return that's important, not just the dividend yield. So let's look at the additional factors. The next thing I wanted to look at is revenue, and over the last 5 years, each of these companies has done a nice job increasing revenue. The dip you see here for Coca-Cola was because the company did not benefit from the COVID-19 pandemic. Coca-Cola has a greater market share in away from home channels, places like restaurants, theme parks, movie theaters, etc. That was hurt during the pandemic, but now the company is benefiting as people are spending more time away from homes, more money away from home, and so now Coca-Cola is getting the benefit as consumers unleash pent-up demand to get out of their house and spend money away from home. Procter & Gamble experiencing a little bit of a headwind. The company has raised prices significantly, well, as has Coca-Cola over the last couple of years, but the distinction here is that Procter & Gamble is seen as a premium brand, right? If you go to the grocery store, Procter & Gamble's products across its various categories are the premium brand. It's the more expensive brand. And so consumers, as they feel pressured, as inflation continues to bite, as income growth slows down, consumers have been showing signs of trading down, choosing the lower priced option. That could be a bit of a headwind for Procter & Gamble. The next thing I wanted to look at is the operating profit margin. And judging by this metric, Coca-Cola is well ahead of Procter & Gamble, and it has been over the last decade, generating an operating profit margin of 28% in the most recent trailing 12 months. Meanwhile, Procter & Gamble generating an operating profit margin of 22% in the most recent trailing 12 months. So given the metrics that I've looked at so far, Coca-Cola seems to be in a better position than Procter & Gamble, especially considering in the near term, consumers are still unleashing that pent-up demand. They're spending more time and money away from home, and that's benefiting Coca-Cola because that's more consumption at restaurants, at theme parks, at sports stadiums, at movie theaters, and so on. So, if the valuation is similar or if Coca-Cola stock is cheaper, I'm probably going to choose Coca-Cola over Procter & Gamble and vice versa. So let's see the valuation. Let's see how they are priced. And according to the price to earnings, the forward PE ratio, Procter & Gamble is more expensive than Coca-Cola, trading at a forward PE of 22. Very close, but a little bit more expensive than the forward PE of 20.85 with Coca-Cola. So, with that being said, coming into the valuation slide, I had already decided that if the valuation was similar or if Coca-Cola was cheaper, I would choose Coca-Cola given the financial metrics that we looked at and given everything I know about Procter & Gamble and Coca-Cola. I've been following these two companies for over 5 years now. So, if I was to choose one of these two dividend stocks to buy today, I would pick Coca-Cola. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.